All right, welcome back to another video. Welcome back to World TFX Academy, where we teach you how to trade step by step, trading 101. Okay, so today we're gonna finish what we started from the last video, which is backtesting, teaching you how to backtest more effectively and why these books are important when it comes to you learning to understand how to trade. Now, if you're new to trading or intermediate, somewhat advanced, and you need some understanding on how to trade the market, you want to understand what to study. What exactly are you looking for, right? What does it look like? So today with our back testing, we are going to go over what the market gives you, what it did in the past. So basically technical analysis, right? So technical analysis is basically you studying what the market did in the past, right? So when it does give you exactly the same thing, or when it do give you the same thing again, you will simply read and react accordingly based on what it did in the past, what it did in the past. Now, everything we're going to go over is going to be straight from the book, the Royal TFX Academy Master Collection, available now on Amazon. Just type in Royal TFX Academy. You should be able to read it for free if you do have Amazon Prime. If you don't, you have to make the purchase. And also, I do have these videos on YouTube. Just type in Royal TFX Academy. Look for the crown, the logo itself. That way you could find me. And normally you'll see me wearing pretty much the same thing. This is my work uniform. So you'll get the full breakdown on YouTube step by step. The videos are breaking down to like 4 sections or 3 sections, which are about like 15 to 19 minutes long. That way you're not overwhelmed. And you could watch these videos at home, at work, or on your lunch break. You could even listen when you are driving, because I am very detailed and giving you proper instruction on how and what you're looking for. Now, back to the back test. Now, this is the ultimate buying setup. Since today we're covering buying setup itself, starting from higher time frame to the lower time frame, how it would look like with the price action. Now, if you want to learn to understand how to buy the market itself more effectively, understanding the structure, the ultimate buying setup is now available for you on Amazon, right? Now, this book right here gives you the step by step, okay? Fully colored, not a lot of reading, great illustration where it shows you exactly what the setup looks like. And all you have to do is see this, go to the chart, and look for the same setup. It will be exactly the same for the most part, right? You identify the same double bottom concept, and based on what I show you here, how to draw the zones, what it's going to look like with the price action, you will see it exactly in the chart, and you will know exactly what to do. So when you are backtesting, sometimes you don't know how to backtest. You don't know how the zone look like. I have them breaking down step by step, starting with the line chart. That shows you the exact turnaround point, emphasizing how to identify the line chart, why it's the turnaround point. And then once you draw the zone in the line chart, you go ahead and identify the wicks, so on and so forth, where you have the double bottom on the higher time frame. And when you drop to the lower time frame, how it would look like. So again, this book is a step-by-step guide that teach you how to buy the market more effectively. The setup that the market will always give you, yes, always give you, will be available in here. All 7 different variations of double bottoms. Okay, but today we are going to go over 3 of them that we do have in this book. Okay, so again, when it comes to the entry, also the price action that the market will give you, so you could pull the trigger. Also have that for you on Amazon. All right, the ultimate price action itself. So the ultimate price action, again, available on Amazon. Colored, straight to the point, detail, showing you how the price action look like when you go on the chart, the color of it, how big it is, the different variations of it, all 5 different variations of price action when it comes to the engulfing bar, because they look different. So these books give you the step-by-step progress and how it looks like and what you're supposed to do. And like I said, fully colored, very detailed, right? Instructions on what to do. You're not guessing. It shows you the setup itself, right? And then it shows you how the price action would look like and how you would buy the market. Now, this price action book covers both seven selling price action and also buying price action. Okay, so the first half covers all buying and the second half covers all the selling. Again, like I said, all 7 different variations of the engulfing bar and how it might looks like, right? So the bullish price action that we're gonna go over is coming straight from the ultimate price action, and the bullish buying setups we're gonna go over is coming strictly from the ultimate buying setup now available on Amazon. Okay, so let's go ahead and jump into this. That way I don't overwhelm you guys. So first thing we're gonna do when it comes to trading itself, right? There are rules you gotta follow, especially when it comes to back tests, right? So our rules are set and designed to make us better traders, to make us more disciplined traders, to be more consistent with ourselves. So rule number 1. So we have 4 rules, okay? 4 rules when it comes to trading, all right? Rule number 1 is your higher time frame. What I mean by that is when it comes to trading, when it comes to technical analysis, when you are studying, when you're looking for a setup itself, either if you're looking for a buy or a sell, you need to start from the highest time frame. And those highest time frame are as follow, right? We have the month. That's the highest time frame, right? And then you have the weekly time frame, and then you have the daily time frame, right? These are your 3 time frames. All your setups will have to be, notice the word has to be, from those time frames. When you use the higher time frame, you have less noise in the chart, all right? And these zones are so far apart. And not only just that, you seeing the bigger picture as far as where the market is going to go for the days, for the weeks, and for the month, all right? You want to be in the bigger picture. And also, when you trade a higher time frame, news does not affect you. News actually help you, all right? Rule number 2, the time frame you are going to use to execute, right? That is the lowest time frame you're going to use. And that time frame, right? That time frame is going to be your H4. Your H4, also known as the 4-hour time frame, okay? Your H4 is your 4-hour time frame. That is the lowest time frame you're going to use. Why? Because it is the best time frame to use. And when you get your price action at the 4-hour time frame, news does not bother you, and it does help you more effectively as far as where it's going to go for a buy or a sell, right? I'm giving you your time back when you trade a 4-hour. Not only just that, your price action is going to be available within 4-hour increment, right? Either 1, 5, or 9, right? If you've been watching my videos, you will see, or you will notice that I've been repeating the same thing over and over. Due to the fact that we trade in the 4-hour time frame, each candle closed in 4 hours, within 4 hours, right? So from 5 a.m. to 9 a.m., which is from towards the end of London going to New York session, that's 9 a.m., right? So if market comes towards a zone, that last 4-hour candle will close at one of those times. So if that last candle closed at a double bottom zone at 5 a.m., that means you will be anticipating your price action to be available to you at 9 a.m. because that will be the next 4-hour candle, right? Very simple, straight to the point. So using the 4-hour time frame, right, which gives you a lot of freedom, by the way, okay, because you're not sitting here just sitting and waiting. You could do a lot in 4 hours. Now, rule number 3 goes hand in hand with that. PA, right, which is your price action, okay? PA is your price action. So that means market, right, is at a price level, and the candles that it gives you indicate that, hey, now it's time to take action, right? The price action we are going to trade is the engulfing bar, right? That's the only price action we trade. The engulfing bar, right? Now, just a little bit of ice into that, right? The engulfing bar literally mean what it says, engulf, right? Just like when there's a fire in the forest, normally the fire engulf the forest, they overtake. The engulfing bar pretty much mean, hey, buyers have now engulfed sellers. They have taken over. And all you have to do is just simply wait for either buyers to take over and sellers to take over. That indication is the engulfing bar, okay? And I guarantee you that if you go ahead and backtest this method, 100% of the time, it's always going to be a bullish or a bearish engulfing. 100% of the time. That I could guarantee you. It's just there's different variations of that engulfing bar. Okay. Now let's go ahead and go to Rule number 4. Now, the last one is not the least. It's one of the most important ones. That is your SL. Okay, your SL or your stop loss, or is your stop loss. Just like it says, right? Stop losing, right? So that's your stop loss. All right. Throw a lot of S's on that because it's very, very important. Stop losing, right? That's where risk to reward ratio comes in. You take your buy, you put your stop loss at the last low. All right. So $4, $3, $40, $400. That's where you will place your stop loss. The reason, so let's just throw a little bit on that real quick. The reason you would place a stop loss is to stop you from losing all the money that you have in your account. So let's just say hypothetically you had $400 in your account and you just take a $2 trade and you say, hey, I'm going to risk $40 or $50 based on the lot size you took. Hypothetically, if the market were to go against you, sometimes it happens, right? If the market were to go against you, it will hit your stop loss and close you out. That means you will only lose that $40 or $50 that you risk, right? Compared to if you don't put a stop loss, it continue to go down, and then there goes your whole account. You blow your whole account. Of course, that's where risk reward ratio comes in. Okay, so don't over leverage, don't go too big with the lot size, and you should be just fine. All right, plain and simple and straight to the point. So these are all rules. Okay, rule number 1, which is the higher time frame for your technical analysis. Rule number 2, the time frame that you are using to actually pull the trigger. All right. That's the time frame. Okay. And rule number 3, the price action itself, the one that you wait for before you click buy or click sell. All right. And then rule number 4, which is your SL, your stop loss, your risk. I'm going to buy this. I'm going to place that stop loss down there. So I'm willing to live with that. If I lose that 40, cool. All right. Now, let's go ahead and jump into the next one, right? So that's rules. We go over rules, right? So the next one we're going to go over is the different type of setups, right? So let's look at this real quick. Boom. All right. So the setups we're going to go over today are going to be the first, okay? The first type of setup the market will always, okay? Notice what I'm using, always. The first type of setup the market will always give you, and that is the double bottom. So since we're covering 3 variations out of 6 of them, right? Now let's go ahead and knock out the first one. The first one is when you have a double bottom where, let me go ahead and talk and annotate at the same time. The first setup we're going over is the double bottom, but this double bottoms is when the market gives you 2 equal bottoms where the bottoms are at the same lows, right? So the market sold and it stops here. Okay. We don't know why it stops there, but we know it stops there. And then it bought up, right? Since the market stops right here, I'm just going to generate a zone, right? So meaning I'm going to mark this level. I'm going to put a line, right? Put a horizontal line, right? I'm just going to mark this level for when and if market come back to that zone. I will look to the left, right? To see if it gives me exactly the same thing like it did last time for it to go up. So it's just a zone. Now, you're not going to catch me saying support, resistance, supply, and demand that often because I don't name these zones, right? I don't give life to it, right? I just simply read and react. If I say, hey, this is a support zone, right? If that's the name it is, if I say, hey, that's a support zone, naturally you start thinking buy, 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 buy. Please understand, a double bottom is a 50-50 trade because the market is still in a downtrend, right? Because when market give you lower lows, it has to break a previous low, right? So if this is the last low, right? And then it has to do this, right? To give me a new lower low. See that? So then I'll mark this area. This is just a zone. See that? Then it has to go to break it to give me another lower low. So again, a double bottom is a 50-50 trade because market is still in a downtrend. We don't have the full complete trend reversal. So double bottoms are the first steps when it comes to a trend reversal. One of the first steps. Okay, that's the first setup it gives you. So let's go ahead and backtrack real quick. Okay. So we just have a zone for when and if the market come back to it. So since we're covering a equal low double bottom is when it comes back to it, it stops exactly at that zone. Okay. This is the first bottom. And then this is the second one. All right. So this is a 2 equal lows. right? And then of course, when we get these type of setup, we always want to look to the left. You always look to the left. Why? Because when you look into the left, you're looking back, right? Why are we looking back? Because the past help us understand the future, right? The past allow us to be one with current present time, right? And anticipating what the future might be given, right? What's the possibility of it's going up or down based on what you saw in the past? It might be going up based on the past. It might be going down based on the past. So we look at the past to understand, to anticipate what the future holds, simply based on what it given the past. Okay. So if last time market stopped at this zone and it bought up, when it comes back to this zone, I'm not saying that it's going to buy up. All right. I want to make that very, very clear. I am not saying that it's going to buy up. But what I'm helping you understand is when and if market come back to the zone, we look to the left to see what it did last time before it bought up. Once it give us exactly the same thing here, we will join the market for it to go up. Because remember, our job is to be one with the market, not tell it what to do. And hence, that's one of the reasons why we don't name our zone. Okay, because if we name the zone, double bottom, buy, 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 right? Sound like Backstreet Boys. Buy, buy, buy. But you have to simply wait for the market to give you what it's going to give you, and all you have to do is just simply read and react.